This chart is designed to show you how private domestic fixed investment could be increased. Over the last 60 years, it's generally been on a downtrend. Now, you could argue that the economy is shifting, it's become more service-oriented, but it doesn't necessarily mean that you shouldn't invest. If it's an intellectual capital business involved in the service industry, it doesn't mean that you should not invest. And this investment trend has to be reversed. It means, again, you're going to see investment back in the USA at the expense of offshoring that investment. Green doesn't always necessarily mean green. We think the opportunity here is that in order to go green, in order to move to renewables, it means that you're going to have to re-engage properly with fossil fuel companies. This blue line is the share price of a renewables company that's invested in European green concept companies, and it's quite significantly underperformed the old European utility companies that are sadly still burning coal. Clean energy shares have lagged in the USA as well. You can see that the clean energy index in the S&P, the green line, has underperformed the global oil index. We're not saying that oil is the way forward. We are saying it's essential in order to have a smooth transition. At some point, oil and gas will run out. At some point, the technology will be good enough for the conversion of solar and wind power to be much more efficient, but you can't turn off the traditional supply and expect to still run a mature and high-functioning economy. The rehabilitation of oil and gas companies particularly is going to be something that we expect to provide a very, very substantial return to investors. We showed this slide a couple of years ago. Even if you do move rapidly towards a so-called green transition, you're going to have to drill because the requirements for the ingredients, the commodities to run a so-called clean energy system are going to lead to an increased demand for copper, for lithium, manganese, cobalt. Everything is going to be required. And so a company that we like, particularly in this space, is Schlumberger in the USA, which is the world's leading geological geodetic exploration proving company for resources. So that's a company that we would think is going to be extremely attractive, not just because of oil and gas expertise, but because it's good at finding other stuff that's going to be necessary in the green transition. BHP and Rio, we think that there's an opportunity here in Australia. People are far too obsessed about what has happened in China and not thinking enough about what China can still yet do to boost its economy. And later in the presentation, I'll show you some of the things that we think are happening within China. We think BHP and Rio are quite attractive. Sumitomo Electric Industries in Japan is a recent purchase. They are one of the few companies in the world that provide core grade steel, which is required to run data centers which generate AI technology. So there's some very interesting companies that are in so-called old industries, steel industries, digging stuff out of the ground. You don't have to pay 40, 50 times earnings to benefit from this shift and from the AI trend.